Thank you, Senator Dodd, and thanks to all of you for coming here today. President Obama said in his inaugural address that our economic strength is derived from the doers, the makers of things, the innovators who create and expand enterprises, the workers who provide life to companies. This is what drives economic growth. The financial system, your banks, are central to this process. Banks and the credit markets transform the earnings and savings of American workers into the loans that finance a first home, a new car, or a college education. And this system provides the capital and the credit necessary to build a company around a new idea. Without credit, economies cannot grow at their potential.
Welcome to ForexTV.com. Today's Tuesday, February 10th. I'm Tim Kelly with the New York Forex Market Buzz. That was Treasury Secretary Tim Geithner earlier today. Now, let's take a look at the headlines from the CEP news desk. Despite strong Republican opposition, the Senate voted 61-37 in favor of an $828 billion fiscal stimulus package today. The victory is but another hurdle in the lengthy negotiations on Capitol Hill that has resulted in a sharp criticism between Democrats and Republicans over a lack of bipartisanship from both parties. While Democrats contend that both sides have made numerous compromises on the bill, Republicans criticize the legislation for containing wasteful spending provisions. 3 moderate Republicans joined the 58 Democrats in the Senate to pass the legislation. Of the 38 votes against the bill, all were from Republicans. Last week's $819 billion bill approved by the House received no Republican support. However, the final passage of the bill is far from near. Both the House and Senate will have to construct a vote on the final version of the bill before it can go to President Barack Obama's desk. Markets reacted negatively, however, as traders were left with few details and even more questions as Geithner's description outlined the complexity of the new plan. Stock markets went into a tailspin at the beginning of the speech, with the Dow dropping more than 300 points. In the Forex markets, risk trades retreated after being up most of last week. Here to help sort out some of the trading details is Rob Booker, author of the book Adventures of a Currency Trader. Hi, Rob. Thanks for joining us today.
Hey, it's good to be here. Thanks for having me.
Hey, Rob, we're seeing a bit of the risk trade go away right now as markets, FX markets, really following the lead on the equity markets, have just tanked right now. Can you give us some perspective on what you're looking at and what your outlook is for the immediate term, maybe the rest of the week, and then a little bit further out?
Yeah, I think one of the themes that I've been paying attention to for the past week and a half, with all of this crazy buildup to the stimulus package, or whatever you want to call it, the bailout plan, the big thing that I've been preparing for is the fact that traders seem to have priced in any good news that could have come out of that way in advance of the vote. We saw the risk trades in currency, the pound Swiss, the pound yen, the euro yen, some of those cross pairs that are really correlated to risk. We saw some of those gain strength on the back of maybe a lot of hope. And I know this presidency is all about hope and whatever else, but I think that maybe a lot of that was misguided, and today we saw that reality didn't quite match up with what traders might have wanted or short-term investors might have been hoping for.
Rob, when you look at the week ahead, where would you be trading, or would you wait for this volatility to subside?
Okay, well, the first, and it's easy for me to say this now, but I'll get into part number 2 in a moment. It's easy for me to say I've been sort of selling all the risk-correlated pairs, and in particular the pound Swiss, up until sort of today. And today was sort of the get-out day on the revelation that, it wasn't necessarily all it was cracked up to be. I am primarily a counter-trend trader. What I'm gearing up for is another leg of that same sell-off. I don't think we're necessarily done with that sell-off. So right now I'm kind of looking at ways to get back in, for instance, on maybe the pound dollar short again, on the pound Swiss again, and I'm waiting for some consolidation. I'm waiting for sort of a deep sigh of, or everybody to take a breath sort of and let things consolidate a bit more. But I think that we've seen a huge sell-off today. We've seen an atypical, abnormal sell-off that was really, really a lot of built-up anxiety about the plan that's expressing itself in trades right now. But I'd be willing to take another whole leg of that sell-off coming into the rest of the week, maybe starting on Thursday or Friday, going into the early parts of next week.
Rob, right now, you'd mentioned earlier before the interview pound sterling trade. We're at 145.18 right now, at the bottom of the range. We saw a range of 149.14 down to 145.11.
Right.
That's a big range, even considering what has been going on with sterling right now. So you think there's another leg down in sterling?
I think there's a possible another leg down, even within the next. And today's Tuesday, February 10th. I mean, even within today, we could see a whole nother leg down, maybe another 100 points, another figure, so down to maybe $1.44 in the sterling, even today. Now, I'm not going to be around for that leg. It's already produced so much on its own that I'm not necessarily going to be around for that. I think, though, if we break through that level, like the $1.44 level, I think early next week, Monday or Tuesday, by that period of time, we could see sterling all the way down at $1.39, which is another 600 points or six figures down further than that. And that's the trade I was kind of talking about. I'd love to see some consolidation first. I wouldn't want to be a part of that immediately. I'd like to see some, range develop maybe between, $1.44 and $1.46 for just another couple days, and then maybe break through that range leading into next week. And I would certainly be willing to be a part of another leg downward, yeah.
Hey, Rob, would that be your trade for this week, or is there another trade?
No, that's my trade for this week. That's absolutely positively what I'm paying the most attention to, is what I just described. Yeah, absolutely.
Okay, Rob, thanks for joining us today. Much appreciated. Good luck with your book. This has been your New York Forex Market Buzz with Rob Booker, author and trader. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on ForexTV.com.